Yeah, okay, really interesting. And you've talked quite a few times about Netflix. What attracted you to the company? And I'm sure that could be 2 hours on its own. And there's a famous meme going around of Bill Ackman of where he sold and where it is now. So I think, what do you think people missed about the company or misunderstood?
Yeah, well, I'll say real quick. I wrote a post in April of. I just know this because I've been looking at it recently. Actually, I updated on Netflix yesterday. I wrote an article in April of 22 titled "This is when it all matters," and I removed the paywall subsequently, so people can go read that for my kind of real time thoughts. Because what I say now, a couple of years later, will be biased by what's happened over the past couple of years. But so yeah, I bought in early 22, and I bought again in April. Um, my views on the industry, kind of funny enough, were really influenced by what I saw as a Disney shareholder. And I own 21st Century Fox before Disney acquired certain assets from them, and then I took equity when they did that deal. So I had a couple years of following the media industry and then really following Disney closely in the lead up to that Netflix investment decision. And what I what became clearer to me over time as I looked at what Netflix had done and how long it took them to get to where they were, and also looked at things like, which I highlighted in the most recent article, looked at the composition of their cost structure, not just on a percentage of sales basis, but on something like dollars spent per subscriber on things like content, on things like tech and development expense. What became clear to me over time was for anybody who truly wanted to compete with Netflix, even just in the US, there was going to need to be a commitment in terms of their ability and willingness to stomach pretty significant losses as they tried to build up a base. And that was just to play in the US, right? And this is also at a period in time when, to me, it was becoming more apparent that the benefits of global scale were going to be very significant, and that Netflix had again been working at this for many years and had already built a pretty significant base. And for someone like Disney, it was feasible for them to potentially make very significant investments and accept, call it multiple years of multi-billion-dollar losses as they potentially chase that opportunity. And they did that to some extent. They've since pulled back to some extent as well. There were others in the space where it wasn't even a question of their willingness to do that. I simply didn't think they'd have the ability, given what their financial profile looked like, and also that the fact that the main source of their cash flows and income at that point in time was linear TV. And you also had this interesting question of what are the different content buckets that you have and how are they being monetized? With the point being that sports rights, something like ESPN, was on a very different trajectory than, let's say the Food Network or something like that. Like in my mind, that stuff was all going away, either by these companies altering their strategy and investing significantly, or simply by being replaced by very similar content that would ultimately find its way to like a Netflix type service. So long story short, as we got to that period in early 22 where Netflix saw their results kind of roll over, I think there was a broader perception. I don't know if it was already by that point in time. I'm sure it probably was that streaming was a bad business. There was also a perception that this was kind of Netflix's comeuppance, and that the competitors were now reaching the point where they were really going to give the company troubles. And I think I wrote it in. I think I used this exact language in that article. I saw it almost exactly the opposite. I saw this as the canary in the coal mine that was then going to lead to very meaningful adjustments in the strategy of the kind of laggards, the Peacocks and the Paramount Plus and HBO Maxes of the world, and that this would ultimately be something that worked to the benefit of Netflix in the fullness of time. Now, some things have happened subsequently that I kind of always knew were a latent opportunity, but uh, hadn't quantified in any specific way. I mean, a notable one is this password sharing crackdown. And again, as I'm talking about the expense structure and something like tech and development expense, I mean, it's a huge difference between Netflix and other players that they have the willingness to take the risk of someone stopping using the service once they crack down on password sharing, but they also have the ability to effectively implement that solution. Which again, I think it's that to think that you can do that is it's easier said than done. It actually requires a lot of investment. It requires a lot of technical chops. And again, it requires things that Netflix had been building for, well over a decade by that point in time, as opposed to competitors who may have launched their service, 2 years prior, and who may have cobbled together two different kind of back tech architectures like HBO Max had done to some extent with Discovery Plus. So it was those things kind of in combination that, to me, led to the conclusion that the size of the prize was still very, very significant. Netflix had proven that they had figured out how to effectively, operate the economics of this business. Something that I also wrote about previously is seeing the different regions in the financials. And when you break out UCAN from international on gross margins and operating margins, it tells a very interesting story. So I thought it was basically just a matter of time before that became more evident globally, which, I mean, to put numbers on it, the company's now at nearly 30% operating margins. And, it wasn't that long ago that their operating margins were, call it 10 or 15%. So it's been a very significant change in the financial profile, along with continued revenue growth. And yeah, so the financials have inflected in a major way. And, that's a lot of what's shown in the stock price today.
Yeah, and I guess that's the benefit, as you said, of just continuing to follow this company. You sort of had a really good understanding of it. You saw this disconnect. I think the catalyst was, they lost a few subscribers, which I think it was a few million because of some very niche loss of rights in India or something. Sorry, I think I'm confusing that with Disney. But no, but they sort of only lost a few. Yeah, but they still only lost like a few million subscribers, and everyone freaked out. The stock tanked. I think it was down at 70% at one point. And that's when you saw, okay, overreaction, I'm going to buy in.
Yeah. Oh, and I should also know, speaking of that earlier period where I'd owned Disney, and I still own Disney, by the way. It's been a lot less enjoyable investment than Netflix has. But, I came into that period, call it 2017, something like that, with a, very traditional value investor thought process on Netflix, which is, this is some crazy, without ever having really done the work, right? This is some crazy, the multiple's insane. This is going to be a competitive business. It's overvalued. And again, without ever really doing the work and understanding what it was. And thankfully, it only took a couple of years for me to stop being stupid on that one. And I saw it a bit more clearly. And then, an opportunity presented itself, and that one worked out well. It'd be nice if they all worked out that well, but unfortunately, that's not the case.